Hi, everybody. Very good afternoon and welcome to XSTOCK Charities. I am a SEBI registered and full time trader with over 9 years of experience in real market. If you want to take trading seriously, you are in the right place. The fact that we are looking at the same chart at the same time, but more than 90% of traders are losing money in the market. One of the main reasons is because most traders are not aware of the certain concept that they need to apply in their setup. So, in this video, I am going to share the four universal key concept of trading. Means, in order to be consistently profitable, you need to apply this concept in all your setup. As a trader, you must know this. The chart that you see on the screen is not simply a bunch of price moving up and down. It reflects market sentiments, means it is full of emotions like fear, greed, FOMO, the same emotions that is controlling most of the traders, which lead them to make bad decisions. Now, I have invested a lot of time, energy, and money on learning this concept. And I'm sharing this with you because I wish I knew these things when I was starting out and struggling. And I can absolutely guarantee you, if you watch this video carefully and understand its application, you will take your trading to the next level. Well, I have prepared a small PowerPoint to make this subject very simple and clear. Let's go. Okay, now the first key concept is price action. Now, what is price action actually means? Price action means understanding the basic fundamentals of market structure. And this is the foundation of trading. You must notice what is the main objective of a trader. The main objective of a trader is to buy low when the price is going up and sell high when the price is going low, right? When the price is going down. As simple as that one. So now you see a market structure like this. What is this? This is bullish trend. So you are looking for a buy. And you see bearish trend. You are looking for a sell. Now, why is it important to know market structure? Why is it important to read market structure? So now what is the characteristic of bullish trend? Higher high, higher low, higher high, right, etc., etc. And that you have the lower low, lower high, lower low, lower high, etc. Right, in bearish trade. So now you need to understand this one. Okay, that is all I'm saying. Because understanding market structure will tell you the market direction. All right, clear. Now, as a trader, you want to buy low and sell high to make money. As simple as that one. Okay, so how can we do that? First, you need to understand the market structure, right? Now, I assume that you understand market structure. You know how to read uh, bullish trend and bearish trend, okay? You know how to read bearish trend and bullish trend, okay? All right. Now, that is very good. Now, let's go to the next concept. Now, you know that suppose say market is bullish, right? Market is bullish. Now, you want to be buying, right? So, you can recognize that you are looking for a buy, okay? But you cannot just simply step in and start buying from anywhere, right? You need to have certain confirmation. Okay, you need to play your odds, right? You need to play for your probabilities, right? You need to understand certain probabilities whether the market will go up or down, right? That is why you need some more concept to uh, add, which you can add it to your probabilities, right? So now let's go to the knuckles. Now you know the market direction, okay? Now price action is check, okay? Now you know the market direction, so price action is check. So if it is bullish, you are looking for a buy. Okay, it is bullish, market is going up. Simple as that one, okay? Now let's go to the next concept. Now the next concept is liquidity sweep. Now what is liquidity? Liquidity simply means money. And liquidity act as a fuel for the price to move. Okay? Without liquidity, without money, price will not move. Understand that one. Okay? And liquidity act as a magnet for the price. Remember that one as well. Now, liquidity, in other words, means smart money. Okay, because you need to understand this. Uh, Price does not just move randomly, right? There are big players present in the market, and they need liquidity to exit and enter their positions. So if you don't understand liquidity sweep, you will be stopped out again and again and again. That is why liquidity sweep is very important. Now, and the most important thing is, they please listen to this very carefully. Okay, you just don't jump into market and start buying or selling anywhere. All right, you have to know session that you are trading. So I track equity, cash, swing, and crypto. So I trade early in the morning when I do equity cash. Okay, because new 9:15 a.m. start new session. Right, so I trade that one. And crypto, I trade New York session only. Okay, only New York session open. Okay, only New York session I trade BTC USD. That's it. And then swing trading, you know how it is. So what I'm trying to say is, now say, suppose as I said, you are uh in a bullish market. Okay, you are in bullish market. So now market opens here. Now where do you see liquidity or smart money? Okay, where do you see money? You see money here, you see money here, you see money here, right? So as I said, this money will act as a magnet for the price, and price will always go towards it. Okay, so now as I said, you are looking for a buy, right? Price is a bullish trend, market is bullish trend, so you are looking for a buy, right? So what do you need to do is, suppose say New York's open here. Okay, New York open here. You have to wait for the sweep of this liquidity or this liquidity. That means you need to wait for the market to fuel up. Okay, so now you don't buy here or sell here. Never. You don't do that. Okay, market opens here. You don't do that. You don't buy or sell here. Okay, you wait for the sweep of liquidity. That means you have to wait for the money. You have to wait for the price to fuel down. So what will happen here? In this case, what will happen here? Either price will move towards this money here, or price will move toward this money here or here. Okay, you have to wait for the sweep of this liquidity. Means you have to wait for a fuel down. As simple as that one. Very, very simple, right? So now this you are not going to buy in this area before sweep of liquidity. You are not going to buy here unless it is sweep of liquidity here or this one. You have to wait for the sweep of liquidity. Okay. Once, so now say liquidity sweep has been taken place. Okay, liquidity sweep is taken. Now you are looking for a buy. Okay, as I said, you are looking for a buy. Okay, what will tell you when to buy? Now liquidity, no, market direction is bullish, right? And now liquidity is fit. That means market is already fueled up. Now, what will tell you that market is ready to go up or down? That we are going to discuss in the next concept. All right. Now, the next concept is the next concept is called momentum. Okay, momentum is very very okay. This is also very very important. So now, say as I just we discussed now, uh, price is bullish. Okay, check price action chain. Liquidity see. Okay, liquidity see. Now check. Now liquidity sweep has taken place. Now how will you know that market is going to go up or market is going to go down? If the price wants to go up, you have to wait for the momentum. Okay, I will make it very clear. Say market open here and sweep is liquidity, and if the market wants to continue, it will give you momentum, and you are looking for a buy unless the change of character, right? That's it. Or if the price sweep this money here, liquidity here, and then give you momentum here, that means I am ready to go up. As simple as that one. I am ready. That's what I'm saying. It's not going. And it's just saying I am ready. So now, what is the importance of momentum? Okay. Momentum simply means momentum will give you the right at the entry. Means if you don't know momentum, you will either enter too early and get stuck. You will buy here and get stuck here, or you might even get stopped out. So you will enter too late, and you will start chasing the uh market, and eventually you will lose money. Okay, so momentum is very, very important. Okay, it makes sense or not? You know the direction, you know the market is filled up, and now you are looking for when is the market ready to go. You just want to know that one only, right? So now market is ready to go. Will tell you by momentum. Okay, momentum will tell you that market is ready to go. As simple as that one. So how market will tell you? Let me just make it very simple for you. So now say, uh, now New Year's open. As I said, the new market open here. Uh, suppose say price see this liquidity first. Okay, see this liquidity first, and then momentum here. Then where is the price gonna go? Right, it will go here, right? It has to go there, right? Right. Like, where is the next money? Here and here, right? So price would either go here or go here. How will you know whether the price is going up or down? That is important, right? Now you have the direction, okay, up. Now you have the liquidity market is filled up. Now track. Now you have the momentum, right? That means momentum will be either up or down, or it will be momentum here, or it will just switch this side and give you pullback and then give you momentum here. That's it, guys. That is it. It happens every single day. Okay. So now you can either check each one of this, whether fit this liquidity or this liquidity. That's it. Okay. So now what will happen? Okay. Let me just explain again. I know I'm repeating again and again to make sure that you understand this. Okay. So now, suppose say session open here, no money here, money here, money here, right? And you know the price is bullish. Okay. So now suppose say one example, price sweep this liquidity first. Okay. You liquidity sweep, right? Then it will pull back for sure. Pull back and then you are waiting for momentum. That's it. Okay. You are waiting for momentum to buy. You don't buy, just simply buy here. Okay. Understand? Right? Or another one will be another example is or the price will shift this low and then give you momentum here. Okay, that means I'm ready to go up. Either it will tell you from here or here. As simple as that one. You pay attention to this when you go to the trading next time. Okay? Very, very simple. Now, you have the market direction, check. You have the filled up, liquidity is filled up, check. Suppose say here or here. Now you have the momentum, check. Give you momentum here or here, check. But something has to say, let's go, right? Momentum is given. It could still be fake out. It can still go down here. It can still come down here also. Or it can still, suppose say, suppose say, uh, liquidity sweep has been taken here, but it will sweep this one and it can still come down also. Understand or not? It can still come down and go up. It can happen, right? It happens. But how you will know that it is, see, money here, here, right? So now, suppose say liquidity sweep is taken here, right? Now it gives you momentum here. Example say pullback and give you momentum here. But it can still come down and sweep this low and go up because market is bullish. But how will you know that momentum is given here? How is the market not going? Because it is not confirmed yet. The final confirmation is remaining, guys. So who will say let's go? Okay, who is going to say let's go? That will tell you about the next concept. That, my friend, is volume. Volume will tell you let's go. All right. So now you had the market direction. Okay. Check. You have the suppose say you have the liquidity see. Okay. Check. Now you have the momentum here. Now check. Okay. So now what is volume? In short means volume is simply the exchange of shares between buyers and sellers at the particular period of time. So 5 minutes or 15 minutes or daily or monthly or weekly, right? Right. Volume volume will confirm once the volume kick in here. Okay, once the volume kick in here, that means let's go. Market is telling you to let's go. So now liquidity sweep is taken here, and then where is it gonna go? Volume is come from here, momentum is given, where is it gonna go? It has to run to the next stop. It has to go there now because price is mathematics. Okay. So now it has to go and meet this one, sweep this one in order for it to either go down, stop out this one and come down, or it will continue to the its trend. Very, very simple. I hope I made it very, very simple. All right. See, as a trader, as I said, I will just repeat once more. You want to be buying low when the price is going up, or you want to be selling high when the price is going down, right? As simple as that one. You don't have to go and start decoding some data or all this fundamental and all these things that if you know is very good for you, you have to keep in mind those things as well. So understanding this four key concept will make your trading very simple and it'll save you some panicking or all these days. All right. So if you understand this one, it will make your trading very, very simple. And it is overwhelming because there's so many information out there. But if you want to just trade and make money without any, tensions or without any more this headache, understand this sport concept. Okay, go and study it. All right, that's it. And we will discuss more about these things today. I this is for the advanced traders, but in the later video, I am going to explain one by one how to read this one, how to read this one, how to read this one in the next video. Right. Well, guys, I hope you understood the four key concepts of trading, or at least you have figured out what you are missing in your setup. And if you are just starting out as a trader, my advice for you is to learn the right thing from the day one so that it will save you a lot of time, energy, and money. If you want to start seeing market the right way, you can subscribe. Thanks for watching. Bye bye.